So what we have today is at 8:30 a.m. New York time. We have US durable goods coming out of the US. And what durable goods are, those are basically items that have a lifespan of 3 years or more. And such items include cars, such items may include air conditioners, such items may include TVs, or let's say washing machines, dryers. I hope you get the point. And we have two major numbers coming out. Well, we have quite a few numbers, but two really major ones. We have the durable goods orders headline number, which basically calculates the total of all durable goods that were bought during the months of April. And we have the durable goods X transportation number for the months of April. So the headline durable goods orders number is expected to come out at around 1% versus previous number at 4.3%. And it's expressed as percentage change from previous months. And the X transportation number is expected to come out at 0.6% versus a gain of 1.4% previous months. So basically they're expecting that the X transportation number will increase, or to be more clear than that, the dollar amounts spent in durable goods X transportation will increase by 0.6% versus March at 1.4%, and the headline number will increase by 1% versus March. The two major numbers are durable goods orders and the X transportation, and as you may already know, X transportation excludes all items that are transportation related. Those could be airplanes, those could be cars. Those are considered very expensive items. For example, sometimes like an airline may order a bunch of airplanes from Boeing, and that may throw off the headline number by a lot. That's what happened. In fact, last month there were a lot of orders for Boeing airplanes, and those are like tens and hundreds of millions of dollars items, and they can immediately throw out the durable goods. When you strip out the transportation item, the really volatile and expensive items such as cars and airplanes and all that, you get a bigger representation of the economy. You get, you just get what the smaller items are being spent on, and mostly very large portion of these items are not necessarily consumer goods, but corporate things. For example, certain corporations may order equipment for their factories, or certain furniture to furnish their offices. One of the big things what was going on in April, is that the Ford Motors Company, the American, obviously the biggest American car manufacturer, ordered a bunch of equipment for their factories to make better cars, more fuel efficient cars, and that's bound to affect the X transportation in April. So this is a very interesting indicator. It's a very difficult indicator to trade, actually. It's very unpredictable. Sometimes it can take off and barely retrace, and we may see like it can take off by 30-35 pips, and then we may see a little retracement, slow retracement that may take like 5-10 minutes, and it may retrace by like 70%. Then it may go up again and either test the initial move or go a little bit higher. Other times it may spike up by 20-25 pips, then immediately spike down close to pre-release price, and then continue moving up. Other times it can spike up, spike down, and go the opposite direction, and go below the pre-release price and never go back. So it really depends a lot on the current country conditions, and it depends on where the price is at and the currencies, and that will affect, and that'll many times determine the effect of this indicator. It's not a very key indicator. In fact, it's not a key indicator at all. Whatever volatility it creates in the market is very short-lived, usually is very temporary. So right now the GBP USD is trading at about 98.70, and we have quite a bit of room there. As we remember, yesterday the 9900 level was tested, and it's very possible that it'll get tested again, which is about 30 pips room on the upper side. I am not sure whether it's going to break it with durable goods. Anything is possible, but for some reason I have my doubts about that. Definitely taking ultimate profit at around 9900 would be a good idea, in my opinion. On the lower side, we saw 9840 being tested earlier today, maybe 9838 or so. So we do have about 30 pips on the downside, and that's usually what this report gives, about 30 pips either direction, unless the deviation is crazy. And as you can see here, I've set up regular 5 pips limit triggers. So if the deviation is at plus, it would be possible sell on GBP USD. If the deviation is -1, possible buy on GBP USD. And that's 5 pips limit triggers. I'm not even going to use this on Awanda because, you know, Awanda widens the spread by about 10 pips on the bid and 10 pip on the offer during such news events. So there's no way I can stay within my target of 5 pips with Awanda. And my second level of triggers is 15 pips limit triggers. Basically, oh, excellent. It seems like my MB trading account just got connected. So I'll use a 5 pips limit trigger on my MB trading. And we have the 15 pips limit triggers. Basically, the deviation is at plus 2.4 and an actual number on X transportation is 3 or higher. It would be a possible sell on GBP USD. Or if the actual number is at minus 2.6 or the actual reading of -2 or more negative, it will be a possible buy on GBP USD. So with those, I'm willing to use 5 pip bounds on Awanda and 15 pips limits on my MB trading. Five seconds. Okay, came out no trade. Came out better than expected, so we should see GBP USD weakening there. The headline number came out slightly worse than expected, and there were positive revisions on both sides from previous months. Okay, I'm gonna look for a short at 98.70 on GBP USD limit order. Okay, I just got filled at short at 98.70 for the after spike. Take profit on half at 98.60. Jobless claims came out slightly higher, but the X transportation number came out a lot better than expected, and as I said, we saw some positive revisions. Headline numbers came out at 0.6 versus 1%. So I think it's warranted to have a short here and hold on for the next 10 minutes and just see what happens.